Yo, what's going on, boys? So in this YouTube video, there was an oil setup that was perfectly good for my entry model, and I wanted to explain why I think this trade was going to lose based off of the stuff that I teach in my community and based off of this understanding of how the market actually moves, liquidity concepts, and draws and liquidity and stuff like that. And right after that oil setup, there's actually a Euro JPY setup as well. And even though it looked literally textbook on the 5-minute time frame, I could not get myself to take it. And there was some things wrong with it, which I explained in the video. And both of those setups, 10 minutes later after recording, did end up go on to lose. So that's what this YouTube video is going to be on today. And what it is going to be is I'm going to roll the first clip of the oil trade where I was talking about beforehand of the outcome, what I thought it was going to do, and then I'm going to roll the Euro JPY trade, the beforehand of the outcome and what I thought it was going to do, and then at the end I go over oil and Euro JPY, the outcome and what did actually end up happening, and yeah, I just wanted to give you guys a full breakdown so you understand what clips are where and the understandings of those. And yeah, that's pretty much it. So without anything else being said, I will roll the clips. Peace. Yo, what's going on, boys? So it's pretty early here, so excuse me if I'm a little cooked here, but it's 5:30 here, and we have this trade on oil, and I want to explain why essentially this trade at first looks like a banger trade. A nice continuation trade, right? Oil is dumping because the strait is now open. Oil is flowing through, and when oil is flowing through, oil is getting cheaper, okay? So it's by no surprise that oil is now trending lower, and again, this is a pair that I am trading now. And we actually had a nice trade on here the other day. It just slightly, unfortunately, wasn't valid. It closed inside the zone, but ended up, continuing down. So, we're overall bearish on it, right? And we have a trade like this pop up where, hey, we're overall bearish, things are looking good. Let's trade it here. So what do you have? You have my standard entry model, you have our supply zone, right? And we don't use accuracy zones on indices, and we don't use accuracy zones on oil. So you have the supply zone, and this is more of an internal structured type of trade, which is fine when things are trending, cleanly. You can take these types of trades. We have liquidity right here, okay? And it's just this internal consolidation. We take that liquidity real quick, and then the theory would be to take that liquidity, because we have to take opposing liquidity when we're trending. Take that opposing liquidity, respect that supply zone, and continue down. Now, what's my biggest thing about this zone? Well, my biggest thing about this zone is, okay, one thing, liquidity isn't the biggest, okay? So understand that you need a lot of other stuff kind of lining up, because understand that just, taking this weak level liquidity isn't going to be the whole move of the market, right? It's different when, some things aren't looking that clean and it's not the best setup, but your setup has some insanely strong liquidity. Maybe liquidity that's been consolidating for an hour or two, so it's going to give a reaction regardless of all the other bad stuff that's about the setup. This is one of those ones where it's like, it's a small level of liquidity. You want to make sure everything else is aligned. Now, looking at this trade, there's nothing that seems out of pocket that's wrong with it. But I will say one thing that I do not like. So, go to the hourly, you can see we are trending down. Now, understand that we are pretty overextended. Now, I'm not calling that, randomly now we're just going to pump up here, okay? Because, I could be saying that, right here be wrong, right here be wrong, right here be wrong, right here be wrong, be wrong right here, and then be wrong right here again. Trying to catch a falling knife, trying to say it's going to, have a big retracement, you're going to be wrong more times than you are right if you were just following the trend on its way down, and then finally, when it does decide to retrace, then finally, that one time out of those 5 times you are wrong with the trend. So follow the trend, but also understand something. Understand that when we're trending down, prices is moved off of liquidity, okay? Prices moved off of liquidity, and a lot of times when we're continuing down like this, most of the times we are chasing something, right? We're chasing liquidity that is built up for us. And here's the scenario here on oil. The scenario is, what liquidity do we have to chase in this bearish trend? Well, we have this liquidity right here, okay? We have this liquidity right here. Now that I wouldn't call really a liquidity sweep, right? It, you know, probably took that liquidity by like a point or two. And you know, I wouldn't call that full-on liquidity sweep. So we have this liquidity resting right here on these levels right here. We have triple lows, major liquidity resting, okay? And if I was to break it the first time, right? And this is where we consolidate and build our liquidity. And what happens this time? Well, we're pushing down to where? To take liquidity to fill orders. And we push down, and what do? We manipulate all three of these lows here. So we manipulate lows from Asia session, which Asia session is your consolidatory session, which builds the most liquidity. So this is going to have the most liquidity under these lows right here. So it manipulates that liquidity, okay, and takes these two lows, and also slightly takes the low that, you know, it just consolidated for about 30 minutes, right? So it takes all three of those lows. Now we have taken major liquidity. We have taken all of the liquidity that's actually even down here to take. So for us now to retrace and continue down, we need to be taking stronger, higher side liquidity. And where is stronger, higher side liquidity, in my opinion? It is not right here that was formed with one bullish candle wick, a little bit of consolidation, and a manipulation down. I don't think that this level holds the liquidity people are looking for to ride this continuation down. I really don't. I think when you take such strong liquidity like this, because again, this is Asia session low, and this is also London session low as well, actually, because London session just ended right here, right? So this is the lowest point in London session. So we take two session lows, all right, all of that liquidity, and to retrace, okay, to build a lower high and then continue down, right? To retrace to build a lower high and continue down, we need to be taking strong liquidity because we have taken everything there is to take down here. We have nothing to chase to unless we take opposing liquidity, because that's how price operates, right? Even when it's trending down, it has to take opposing liquidity to continue, right? That's why you see things like this. You see opposing liquidity. It has to get taken for it to continue down, okay? Right? And Asia builds liquidity, right? And we run up and we fill in some imbalances and stuff like that, you know, maybe take some minor liquidity, but we generate liquidity, retrace, and then we take that liquidity, right? We have to constantly be taking liquidity in both ends. And after we take a major level of liquidity like that, in my opinion, I think that we're going to chase higher to take deeper liquidity before continuing down, right? Whether that is this level, right? Whether that's this level, right? I'm not sure, but what I am sure of is this is not enough liquidity, okay? So that is why I'm skipping this trade that is valid for my entry model, okay? And I like to make these videos to show that you can have a perfectly mechanical good entry model, but if it's mechanical and you follow through with the same procedures anytime it pops up, that is a strategy that is not going to make you money, dude. You're not going to have probable statistics, because anything that can be coded like this, and anytime that this entry model pops up and can be used and it's profitable, that'll quickly degrade and go away in the market. What happens is you need a mechanical entry model that's profitable, you know, half of the time, right? Maybe even less than half of the time. But then you have to apply your human edge and your other filters, your filtration system, to tell you which trades are actually good to take and which trades are not. And some things like human edge is understanding how liquidity works like this, right? I don't know what I just did. Some things is understanding how liquidity works like this, okay? And some, you know, filters are, you know, understanding liquidity like this and being like, oh, when we take major liquidity like this, I'm not going to take this trade. You can add any filter you want, right? And then you have your actual intuition human edge of a setup might look absolutely golden and you just don't like it. You can't explain why. And the reasons of that is because your brain sees pattern recognition and you see the setup play out over and over and over again, and continuously your brain sees that and you see that pattern play out over and over. So when a setup pops up again, that you saw previously that didn't really play out because maybe you just didn't like the way the candles are moving or something like that, that is your brain giving you pattern recognition. And that is a real thing. That's intuition in and of itself. That's human edge in and of itself, right? And again, adding filters like this helps your entry model. So, yeah, that's the reason why I'm skipping this trade here. And I'll show you guys after this plays out. If it doesn't play out soon, I wish it would play out soon, so I don't gotta make 2 parts of this video. But it's looking like I'm gonna have to. And yeah, in my opinion, you guys can see that. You guys can see, once you understand where liquidity is resting, it's very easy for you now to see, after I draw all that out and explained it, it's very easy for you now to see, hey, that was a major, draw on liquidity. Look at that major manipulation of that liquidity. There's nothing else to take. I'm not just gonna catch this little retracement and then hope for price to dump again without taking any other liquidity. We've taken everything that's below us. We have nothing to chase to. Whereas if we're riding this trend down and we retrace, we never took Asia low yet, that's a fine trade to take. Why? Because we have something to chase to, right? We're running to these draws on liquidity down here. Whereas now we've already taken these draws on liquidity. So I'm not comfortable shorting the market unless we take opposing draws on liquidity. And in my opinion, there's just not enough liquidity. That's right there. That's all it is. There's genuinely just not enough liquidity after we take a major level like that. So for me personally, I am gonna sit this one out, and I'm gonna update you guys when this trade plays out, and when it hits stop loss and continues up, and just to show you guys that my entry model like this needs to have some edge with it. And this is the stuff that I teach inside of my Discord, is how to actually understand this stuff, right? It's very easy for me to draw out a line and say, hey, there's liquidity here, or turn on this indicator, there's liquidity here. But if you don't know really what it means and when to use it, then it's not really going to benefit you at all. So yeah, that's pretty much it, and I will catch you guys on part 2. Yo, what's going on, boys? I'm gonna be going over this Euro JPY trade that's valid for my entry model, but I'm gonna be explaining why I'm personally not gonna take this trade. Right there, it is valid for the flip entry. If you want to take a flip entry, and I'm going to explain why I'm not taking this trade. As goated as this looks on the 5-minute time frame, as absolutely goated as this looks in the 5-minute time frame, I really can't get behind putting this trade on. And I'm going to explain to you guys. So if you don't know my entry model, again, very simple. You want to find trending markets, and it's just supply and demand, except you want to see a clean liquidity sweep before your demand zone. And you don't want to see a candle close inside of your demand zone. It only wants to, we only want to see a wick in. Pretty much you want to see a lot of volume after we take liquidity, showing that this liquidity or this higher low actually held a lot of orders to move the market and to give a nice reaction. Now from there, that's just the reaction point. From there, you want to make sure everything else aligns for price to actually continue up, and it has a reason to chase higher, rather than being higher time frames or internal liquidity and stuff like that. So when you pair those two things, you get the entry model, which is just trending markets, take liquidity, tap into a demand, and you continue. And this is exactly what I have drawn out, right? You want to see trending markets, you want to see price have your lower high right there, or a higher low, and take out liquidity, or take out your high right there, and then take liquidity, right? So this is a continuation. So as of right here, you have your entry. So you could enter right here, right? Spreads, you'd probably be in right around here. Stop loss under this wick. So this is one of those strategies that you can actually put the stop loss directly under the wick. I know there's not too many strategies out there that's like that, but you can do that. So, and your TP would be usually a strict 1 to 3 or strict 1 to 4. So right around there. But this is the reason I'm not taking this, right? It looks like, hey, we were trending down, right? Let me clean this chart up for you. We were trending down, and we shift to bullish market structure, right? We were trending down, and we flip to bullish market structure. This looks fine, right? This looks like continuation from bearish to bullish. This trade looks fine. What's wrong with this trade? The only reason I can't get behind putting this position on this trade is strictly because of Well, a couple of things. We go to the really big higher time frame. It's just not too clear. It's not too clear. We are slightly putting in higher lows, you could say, like this, but we're also getting hammered with sells as of recently with all these lower highs. And with that being said, on the 1 hour time frame, you actually have an LSD type of setup where price is dumping, and when it gets overextended like this, you're gonna have a retracement, right? And to target to perfection of where that retracement is going to end at and if we're going to continue down is a very hard thing to do, right? Because we could be chasing to imbalances, we could be chasing to draws on liquidity, we could be chasing to any specific level, right? So it's very hard to see that price is trending down, we retrace, we have a pullback, and it's very hard within this pullback to drop down on that 5-minute time frame, knowing that you're going against the higher time frame trend and you're longing to you don't really know, right? You're longing to you don't really know. You're longing to maybe this imbalance, right? But price could also be trending down and retrace to what? Take all of this liquidity that's resting right here, right? This is consolidation of, probably good 8-9 hours of consolidation right here. Above this level holds a lot of liquidity. It holds a lot of liquidity for price to go take, right? And then we have an accuracy supply zone. Go and take that and then continue down because we have to take opposing liquidity to continue, bearish and to continue trending down, right? So it's very hard to get behind that fact of, okay, higher time frame trend, it's not really that clear at all. As of recently, it was more bearish than bullish by all means. This is the most recent trend, right? This is the most recent trend from the middle of June. I would even argue from a whole way back here, right? We were just pumping sells, made one last higher high, which was mainly just a sweep of this liquidity. And then from here, we've been just dumping, right? We've been dumping. So as of recently, this is the most bearish price action, or this is the price action, in my opinion, it is bearish, right? So we can see this continuation, and when we get a retracement, where is our retracement? Well, it's very hard to pinpoint exactly where you think it's going to go, but a lot of times you're chasing imbalances within the market, and you're chasing liquidity. Okay, same thing here. So what happened here? Price makes a lower low, right? And what do we have? Well, we have an inefficiency, right? This means price ran inefficiently and we left a bunch of imbalances. Price is always attracted to those levels. So we come back and we fill that imbalance, right? Now we fill that imbalance, we can continue down, but we don't, right? We don't quite take that low. We retrace one more time, and where's price always chasing to? Imbalances and draws and liquidity. And what do we have right here? Well, we just have a clean, literally a clean manipulation of that high right there, taking out all that liquidity resting above the high, and then a continuation down. And in my opinion, it would not surprise me if we see something similar right here of all this liquidity, a quick liquidity sweep, and a continuation down. In my mind, I can't get behind the fact of longing completely counter trend and not really knowing exactly what I'm targeting and where price might retrace from, right? And the thing with this is we can easily go and chase this imbalance right here, and this 5-minute trade can just continue up chasing that imbalance, and this 5-minute trade can win. That's fine, right? But if you're not understanding market context, the people on the 5-minute time frame is going to be like, oh, this is just such a clean trend, right? I understand price action. We're shifting from bearish to bullish, and now I just follow the trend, right? Whereas if you take a setup like this and it's, it does end up winning, it's not going to win when you take it 100 times in a row, right? You're not going to have an edge when you take a setup like this 100 times over and over and over again. So, if you're not understanding the difference between a good win and a bad win, right? For example, if this won, this would be a bad win in my opinion. Then you're not going to really get better as a trader. That was one thing I struggled with as well, is first of all, just understanding good losses and bad losses, and second, good wins and bad wins, right? There was trades that one that really was horrible setups, and I was thinking I was doing something correct, right? That's where you have to understand the market just purely on a deeper level. So that's the things that I see, and that's why I'm not going to be taking this trade. And yeah, that's pretty much it. That's literally it. And I'll update you guys as soon as this plays out, to see if my thesis is correct and price takes all of this consolidatory liquidity that's literally resting right here, and we take it and we continue down. You know, we'll see what price does, and we'll go from there. And I'll update you guys as soon as this plays out. It's good, boys. I'm back. I'm gonna go over oil, and then I'm gonna go over Euro JPY here, because I know I made two separate videos, and they kind of happened similarly at the same time. So oil just got wicked out here, and I want to make this video now, just because, you know, it just happened, and I can get this video out, because, you know, you would have technically gotten wicked out right here. You know, I'm not gonna wait an hour later to see what price is gonna do. You would have got stopped out here regardless. So obviously this liquidity did not play a major role, and this liquidity wasn't all that we were targeting on our way down. Now obviously, you know, things can play out differently, and the more time that this setup has to, you know, marinate, right, you can see maybe some consolidation, maybe we build liquidity and we manipulate something, right, maybe we do chase higher and take this draw. Regardless, this liquidity wasn't big enough. We took it, reacted off supply zone, and it just wasn't enough, and we got wicked out. So again, I did not take this trade, and that is why I skipped it, to be honest. Draws and liquidity like that, even though it's in trend, things can still be wrong with it. That's what people don't understand, and people aren't understanding why some of these lose. You need to understand market structure, right? This is the stuff that I teach over and over and over again. And then if we get a Euro JPY, again, setup right here, like I said, textbook on the 5-minute time frame, but you're literally actually getting LSD on the 1-hour time frame, which is hilarious, because it's just like you're going back and forth with entry models on the higher time frame and lower time frame. And again, this for me, like I said everything in the before the trade happened, so I don't really have anything else to say. And it's really just, it's bearish market structure, strong liquidity, and I can't get myself behind longing completely against the trend. I can't get myself behind it, to be fair. I can't do it, right? It's completely counter trend for me. You know, rather we do go up and maybe we chase that imbalance or something, it's still counter trend in my opinion, and your chance of that is a lot less likely to happen, rather than it just continuing down and stopping you out, because it's counter trend compared to the higher time frame. So that is why I skipped these two trades, and hopefully that, you know, gives you guys some outlook. If, you know, maybe you guys were watching these trades, or if you took one of these trades or anything like that, hopefully you know, this gave you a little bit of outlook. Again, this is the stuff that I teach in my community. That's the stuff that I'm, you know, always preaching to people trading this entry model, is you need to understand market context. But yeah, if you guys are interested in learning that type of stuff, and if you guys, you know, need to know more about that stuff, I will have a link in my bio. If not, it's all good. I have a lot of free content on my YouTube as well. But yeah, that's pretty much it for this video. I hope you guys enjoy this, and yeah, I'll see you guys on the next one. Peace.